Hello and welcome back. So in this lecture video, I'm going to be talking about transferred in cost with regard to process costing and also cost flows for process costing. So if you're following along, I'm on page 140 of your course pack. So when we talk about transferred in cost, this is kind of an example I talked about in the prior lecture video where I was saying that total costs increase as we move through each processing department. So for example, if we have the mixing department, we have the WIP, work in process, for the mixing department, the work in process account for the packaging department, and then once it's been packaged, it moves to finished goods, and then of course from finished goods, it moves to cost of goods sold. What we say right over here is that the total costs increase as we move through each department. So here in WIP mixing, we're adding in materials, labor, and overhead. So we're adding in the materials for the soap, mixing the soap, and then we're also including in allocating, applying any overhead to potentially the direct labor that we incurred to mix the soap. And then what happens is when it's done mixing, the soap is not done because it still has to be packaged. But what we do is we move those costs associated with mixing to the packaging department. And then in the packaging department, we add in more materials, maybe the bow, the nice packaging. We also have to add some labor because we have to pay people to do some to put on the bows or to operate the machinery to put on the bows, and then all the nice packaging. So what's happening is as we move from here to here, from mixing to packaging, the total costs are increasing because we keep adding in more materials and labor here, and more materials and labor and overhead here, and then once it's done, it moves to finished goods. In terms of the idea of the transferred in cost, what happens is if we look back over here, the packaging department receives a cost from the mixing department. Once it's been mixed, WIP mixing sends its cost to WIP packaging. So packaging is receiving the materials, labor, and overhead associated with mixing the soap, mixing the product, from the mixing department. So this is a transferred in cost from WIP mixing to WIP packaging. So that's what I'm saying over here. Right? WIP packaging receives a transferred in cost from WIP mixing because this is the product flow. It's mixed first and then it's packaged. And once it's been packaged, it's done, it moves to finished goods. Total cost will increase as we go throughout here, but also WIP packaging is receiving the cost from WIP mixing, and we call that a transferred in cost. Okay? As saying over here, each processing department has its own WIP account, so WIP mixing, WIP packaging. If we add WIP mixing plus WIP packaging, that would equal the total amount of WIP for the entire company, assuming the company only had 2 processing departments. Overhead is also generally applied as we did in the prior chapter of job order costing. Remember, the way that we apply overhead is we first calculate the overhead rate by dividing our estimated total overhead divided by our estimated total allocation basis. That gives us a predetermined overhead rate. And then what we do is we multiply that predetermined overhead rate times the amount of allocation base used during the accounting period. Okay? And what we're saying over here, the difference is that we would have a separate overhead rate for each department. So we would have a separate one for mixing and a separate one for packaging. Continuing on by talking about some product and cost flows with regard to process costing. What we're saying over here is that we can add materials, labor, and overhead at different stages in the processing department. So with that saying, this sentence is saying is that if we think about mixing soap, what we might do is add in all the materials for the soap at the beginning. Okay? And then what we do is we have to then mix it. But the materials could be added in at a different point than the labor, because they could be added in in the beginning. And then we spend the rest of the cost of labor and overhead to actually mix all those ingredients. Okay? We talk about here with our work in process, we have our materials, we have our labor and overhead, right? And then what we did, this is kind of similar to what we did with our job order costing. Remember, our direct materials come into work in process. Our direct labor comes straight into work in process. Our manufacturing overhead, these are our indirect manufacturing costs, and this would be our applied manufacturing overhead. So if you think back to what we talked about in job order costing, with applying overhead, the journal entry was debit WIP, credit manufacturing overhead. Then, once the product is finished, it moves from work in process to finished goods, and then once it's sold, it moves from finished goods to cost of goods sold. Now, how do we figure out the cost of the units that we finished? And if you think about this, this is cost of goods manufactured. This is cost of goods sold. How do we determine that? Well, we take the number of units that we completed, okay, times the average unit cost. So when we think about this in terms of soap, we could say, how many bars of soap did we mix and also package? Because in order to sell our soap, we have to mix the soap, and then we also have to package it in those nice little bows and all the nice packaging. And then it's ready to be sold. So once it's done packaging, right? Once it's done packaged, then we can move it to finished goods. So what we can say is how many bars of soap did we mix and package? Then we could say multiply that times the average unit cost. This is different than job order costing. With job order costing, we said how many jobs did we complete? And then that came over here to finished goods. How many jobs did we sell? And then that came over here to cost of goods sold. Here, we're calculating average, which is not something that we did with job order costing. Why can we calculate an average here with process costing? Because they're similar and identical products. So yes, maybe the vanilla soap costs a little bit more than lavender soap, but it's still soap, and the average cost isn't that different. So we can just say the total number of bars of soap, vanilla, lavender, all together, times the average unit cost. This would give us the cost on average of the units that we completed. We move that to finished goods. And we say, how many bars of soap did we sell times the average unit cost? So we will spend some lecture time and other additional lecture videos talking about how to calculate this number, these two numbers, the average unit cost. And if I asked you, if I said, let's say you go to Walmart and you buy 10 t-shirts for $100. On average, how much did you spend per t-shirt? Well, that's easy. You spent 10 bucks. How did you do that? You took the total cost divided by the total units, and that gives you the average cost. And that's the exact same thing that we're going to do to calculate our average unit cost here. Okay? But it is a little bit more complicated, but in the abstract, it's the exact same idea. Total cost divided by total units. So continuing though with our discussion of cost flows in process costing, as I was saying earlier, we're going to have to figure out our average unit cost. And how do we do that? We take our total cost divided by our total units. This is just kind of going over the diagram on the prior page. When the units are completed, we multiply the number of units completed times the average unit cost. Okay? And then we would debit finished goods and credit work in process. Debit finished goods, credit work in process. And then when we sell it, we debit cost of goods sold and we credit finished goods. These are our T accounts. Okay? The sum of our WIP accounts equals the total WIP for the entire company, which is something that I already discussed. So let's walk through some journal entries and some T accounts right over here to illustrate the cost flows in a little bit more detail. So our company makes wood preservatives in two separate departments, a mixing department and then a packaging department. In wood preservatives would be a good example of process costing. These are similar identical products manufactured in large quantities. Kent Chemical has a following cost for April. Direct materials cost for the mixing department, $142,000. Direct labor for the mixing department, $62,200. At the beginning of the year, the mixing department estimates that it will incur $2,060,000 in overhead costs, $720,000 in direct labor costs. Kent allocates overhead on the basis of direct labor. So here's what I want you to do. I want you to pause the lecture video. First, calculate the predetermined overhead rate, just like what we did with using job over costing, and then apply the overhead to the mixing department by taking that rate times the amount of direct labor used by the mixing department. So I want you to apply overhead to the mixing department by first calculating the overhead rate and then multiplying that overhead rate times the amount of overhead used by the mixing department. And then hit pause, and then we'll come back and check your work. Hello and welcome back. And so this is hopefully what you got. We take our estimated overhead divided by our estimated allocation base, which gives us $3. This is $3 of overhead for every direct labor dollar. That's what this is telling you. This is your rate. We apply $3 of overhead for every direct labor dollar in the mixing department. So the mixing department had $62,200 of labor times the $3 of overhead gives us $186,600 of applied overhead. Okay? So continuing on to the next page, we say further suppose that during April, the mixing department completes units with a cost of $360,000, and then of course those are transferred to the packaging department. So we already went over our overhead. Okay, so I just did that on the separate page. So now I'm going to look down here and look at our T accounts, which comes on to our next page. So we have our T account right over here for WIP mixing, and then our T account over here for WIP packaging. Remember, WIP, these are current assets. These are inventories. So they are current assets. So that means we increase our current assets with a debit, which is on the left side. We decrease it with a credit, which is on the right side of the T account. So if you look back in the prior page, remember we had our $142,000 of our direct materials. That was given to us. And then what we also had is our $62,200 of direct labor. And then maybe remember that the journal entry to apply overhead, debit WIP, credit manufacturing overhead. So we have our $186,600 over here. And then we were told on the prior page that we completed $360,000. We mixed $360,000 worth of wood preservatives. So remember, once it's done mixing, we credit mixing to reduce the WIP mixing because it's an asset. Crediting this asset decreases the balance in this account. And then we move it over here to WIP packaging. Okay? So when we look over here on our next page, we could then look at our journal entries right over here to mimic those. Okay? So with the first one, with our direct materials, we can say WIP mixing 142, and then of course it comes from our raw materials. We credit raw materials just like we did with job costing. With our direct labor, we had our debit to WIP mixing for $62,200, and then we would have wages payable, credit to wages payable for $62,200. That's our direct labor. And then number 3, with our manufacturing overhead, we debit WIP, and then we credit our manufacturing overhead. And then finally, the journal entry to recognize that we completed mixing $360,000 worth of wood preservatives, and then we moved that from WIP mixing to WIP packaging. Well, WIP packaging, the balance is going up. WIP packaging is an asset. How do I increase an asset? With the debit. So I will debit WIP packaging for $360,000, and then I will credit my WIP mixing because the balance has gone down because I'm moving it out of WIP mixing to WIP packaging for $360,000. This page 145 and then on 146 are just kind of giving the summary of different journal entries similar to what I just did. Thank you.